Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm here to go ahead and review the global markets, talk about what's going to happen prior to it actually happening. I'm here to talk about the Monday session before the Monday session actually opens in the pre-market action, talking about the prior night and what is going on currently. So without any further delay, let's go ahead and review all of this information because I have a very limited amount of time. First of all, the dollar index is trading sideways. I don't have much of a channel or much of a chart set up for me. The only thing I see right now is that the dollar index is consolidating, not too big of a deal. Moving on, the Euro-US dollar. Euro-US dollar is pushing into this upper channel. I would be interested in shorting it from perhaps 60-40 pip profit. If that's the only forex trade I make for the month of August, that is good enough. And the main reason why it's good enough, guys, is because if it's 60 pips, that's equivalent to around 30% return on investment. And the main discipline here is that if you trade 10% less, or maybe 90% less than all of the other market participants, you save yourself a lot of commissions, you keep yourself out of bad trades, and you're not trying to apply your trading position in just about every single setup. Again, these multi-month, multi-year setups, they will make you a lot of money and they will keep you out of the market around 95% of the time. So you're not going to be involved in markets for much, but at the same time, as a trade-off, since you're not going to be as active, you do get more time. You really do. But at the same time, you're also limiting your risk, you're limiting your exposure to markets, and you're only taking on trades that will benefit your portfolio. Okay, so again, I would consider shorting it only if it gets to this upper channel again. Once it does, I would probably short it, wait for a little bit of a pierce above it, and then short it, and then put in a tight stop. Once I break even and a little profitable, then I'll put in a break even stop, so if the trade works against me later on, I get kicked out I get kicked out of a trade without losing any money. So again, that's basically how I average into a trade. But moving on, I'm going to go ahead and talk about the S&P 500 E-mini index, September 2011 futures. You are seeing somewhat of a bounce and somewhat of a recovery. Again, I am very doubtful that these futures markets are making a real representation of again, I really doubt stocks will make much of a recovery. Right now I'm looking at the German bond yield rise, Italian and Spanish yields fall, and European Central Bank intervention. Okay. You know, you could do all the bond intervention in the world. It doesn't change the fact that the US government has had a downgrade. Okay, and chances are the European stocks will perform poorly. Therefore, I still anticipate weakness in the US stock market. So, you know, at first the E-mini September 2011 futures were down by 2%. Well, actually down earlier by 2.8%, and now it's only down by 2%. Again, I'm very skeptical. I still think stocks will have a very negative day for both the European and US markets. It doesn't matter what kind of intervention you do. Doubts still linger in the air, and if the superpower of the world gets a downgrade in you know, debt rating, then of course every country in the EU is just as susceptible to a downgrade, just like the USA is. So again, how I would trade the S&P 500, I would just remain short. I wouldn't be much of a buyer. I would avoid buying stocks, and I would just be short. It's that simple. Just ride the momentum lower and look for breaks in different trend lines before entering into a short position. Okay, so again, I anticipate a weak Monday. I don't know the exact percentage decline, but I do know that the sentiment for the US market is very negative on the Monday day trading session. So again, moving on, Dow Jones Industrial Average has been able to break right below that trend line, and chances are on a weekly basis we will, as long as we close below this previous trend line or this previous candlestick, we have another negative day. chances are we'll run into the 200-day moving average this week. But as long as we trade negative and close below this, we have basically confirmed below the multi-year trend line, and it's going to be a very long time before we get back above this trend line. So again, I'm very skeptical that this is just a normal decline. I think that there's going to be far more outreaching effects from a AAA downgrading. The main reason why I am very doubtful of this recovery is because what we lost was basically a AAA credit rating. We haven't really balanced the budget. And since we're cutting back $2.7 trillion that was going into the economy, we've basically put a damper on gross domestic product growth. All right, without the government spending and wasting money, the economy doesn't grow as fast. And unfortunately, we would like to have a fast-growing economy, we would like to balance the budget deficit, and we would like to get a AAA credit rating. Well, unfortunately, the economy isn't going to grow as much because the U.S. government has cut back its spending, the biggest spender in the U.S., or more like the biggest spender in the world. Okay, that makes Queen Elizabeth look like a cockroach. That's what the U.S. government does. That's what the U.S. government does. So again, the U.S. government does what it does best, and that's spend money. And now that it's not spending money, the economy can't grow as much. So again, economic growth will be reduced. The country will continue to get debt downgrades until it finds a way to properly balance its budget. And currently, the U.S. government has not properly balanced its budget, and it has already lost its AAA credit rating. So again, we've lost a lot, and we haven't gained much. And therefore, I am very pessimistic about our economic recovery, especially without the government wasting its money in order to stimulate the economy. Okay? Direxion Daily Small Cap Bear Fund, Daily Small Cap Bull Fund. This fund has had a humongous ride lower. I've been short for quite a while now. In fact, I've been short at around 75. So again, I have had a humongous amount of profit made right here, just by shorting a Direxion Daily Small Cap Bull triple fund. Okay, so again, the thing about Direxion funds that are leveraged is that they have a time decay factor. Okay, and when you short a fund, you know, especially funds like this, because it's a small business-based fund, small businesses are always thrown out first. They always lose value faster than bigger companies in a market decline. So again, I make much more money with those type of stocks falling even faster. So I just short the daily small cap bull 3 times, and plus I have a triple multiplier effect. So I'm leveraged 3 times, and I'm shorting small companies. Therefore, I am maximizing my return on investment in this type of market environment. And that's basically what I would like you guys to do, because again, I don't really see the 200-day moving average holding much support, and I do anticipate further weakness over the longer term. Gold spot. I don't really like buying into the gold spot right now. Main reason being is that the gold spot has gone up a bit much. I'd much rather be a short on a stock like this than hope for a 2 to 3%, maybe 5-10% appreciation on this. See, I've already made, okay, I'm in the money by around 30% on this trade. On this trade, I would have to see gold appreciate by around $400 to $500 to be 30% in the money. So again, between the two, I think this would have been, this has been a much better trade for me personally than this one right here. Okay, so again, gold is a much slower way to making money versus just shorting a daily small cap bull 3 times fund. And it's a very diversified way, and you're making a bet against macroeconomic factors. Alright, so it's a good way to limit risk. Now for the silver spot, I don't really have much of a trade recommendation on it. It's trading on the 20-day moving average, and I'll get back to it once I see it either trade above the 20-day moving average or pull back from the 20-day moving average. Again, I don't want to be much of a trader, but if it pulls back from the 20-day moving average, it means that the silver market will probably continue a short-term downtrend. Okay, as for copper, I am a pretty big bull on copper, but if this trend line is broken, I anticipate much further weakness in the copper ETF, which is a pure copper ETF. The ticker symbol is JJC, Barclays IPAT DJUBS Corp. So again, this is just a pure play on copper. If this is broken to the downside, again, I would really like to pick up some shares at the 200-day moving average for a short-term balance. So that does it for me for today. If you guys are interested in my charting software, check out the link right below the video. If you guys like the content I produce, be sure to go ahead and subscribe. The content is made on a voluntary basis, and I will have much more for you guys in the weeks and months ahead. So again, take care, folks, and I'll go ahead and see you all next time.